What just happened between China and the United States could shake the foundations of the global economy. If you think trade wars were already intense, think again, because this time, the stakes are even higher. China has just raised tariffs on US goods from an already painful 84% all the way up to a staggering 125%. Yes, you heard that right, 125%. But what does that really mean for American businesses, global supply chains, your wallet, and the future of international diplomacy? Buckle up, because this isn't just about numbers, it's about power, politics, and a potential economic storm that could impact every corner of the world. Imagine you're a US farmer, an automaker, or a tech manufacturer. For years, you've relied on China as one of your biggest export markets. Soybeans, pork, electronics, semiconductors, you name it, China was buying. But now, with this tariff hike, China isn't just slapping a few extra dollars on imports. They're sending a message, loud and clear: the rules of global trade have changed, and America might no longer have the upper hand. The tariff war that began as a tit-for-tat under the Trump administration has just exploded into something far more dangerous. So why did China do this now? That's the million-dollar question. Is it a response to growing US protectionism? Or is it a signal to the world that China is ready to lead global trade without relying on American imports? Whatever the reason, the consequences are real, and they are already unfolding. Just hours after the announcement, markets reacted with shock. The Dow Jones dropped sharply. The S&P 500 stumbled. Asian markets followed suit, and global investors scrambled to reposition their portfolios. This wasn't just a ripple. This was a wave, and it's just the beginning. Let's talk numbers. A 125% tariff means that for every $100 of American goods shipped to China, Chinese buyers now have to pay $225. Think about that. Would you still buy the same product if its price more than doubled overnight? Probably not. And neither will Chinese companies or consumers. That means US exports, especially in agriculture, tech, and manufacturing, are going to feel the heat immediately. American farmers, who shipped over $15 billion worth of crops like soybeans to China last year, are now staring at a market that might simply vanish. US tech giants that once thrived on components and hardware deals with China may suddenly find themselves shut out. And it's not just about losing sales, it's about losing influence. But here's where it gets even more interesting. China isn't just cutting off trade with the US, they are doubling down on other alliances. Over the past year, China has been quietly strengthening trade ties with the European Union, Latin America, Africa, and Southeast Asia. Countries that once leaned heavily on US leadership in global economics are now seeing China as a more predictable partner. While the US raises tariffs, imposes sanctions, and talks tough, China is signing trade deals, building infrastructure through its Belt and Road Initiative, and expanding its influence in every direction. Could we be witnessing the beginning of a new global economic order? It's not just exports that are at risk, consumer prices inside the US are set to skyrocket. Already dealing with inflation, Americans may soon face even higher costs on everyday items. Imagine paying $800 for a smartphone that used to cost $400. Or watching the price of a $20 toy jump to $40 overnight. Why? Because many of the components in those items are either made in China or assembled with Chinese parts. As the cost of importing those goods rises, companies will pass those costs on to the consumer. You? Me? Everyone. This is what economists call tariff pass-through, and it's as real as it is painful. Now, here's a twist you might not expect. Despite all this economic chaos, there are still some who believe this tariff war is necessary. They argue that the US must protect its industries from unfair Chinese competition. That China has long used intellectual property theft, forced technology transfers, and state subsidies to gain an unfair advantage. And maybe, they say, a little short-term pain is worth it if it means leveling the playing field in the long run. But is that what's really happening here? Or are we simply entering an economic arms race with no winners? Speaking of jobs, the ripple effects of this tariff hike will almost certainly hit American workers. Already, some US factories are cutting shifts, laying off employees, and slowing production as exports decline. In the Midwest, where agriculture and manufacturing reign supreme, communities are bracing for economic hardship. For a worker on the ground, it doesn't matter whether it's about geopolitics or trade deficits. All they see is a paycheck that's disappearing. Let's not forget the criticism surrounding how tariffs are even calculated. Many economists argue that using trade deficits as the sole justification for tariffs is flawed. Just because the US imports more from China than it exports doesn't necessarily mean the trade is unfair. Trade deficits can exist for many reasons, including strong consumer demand or currency fluctuations. Yet, tariffs have become the go-to tool for politicians looking to appear tough on foreign policy, even if the long-term economic logic doesn't hold. Internationally, other countries are watching closely. Canada, Germany, and key EU nations have voiced concern about rising American protectionism. They warn that isolating major economies through tariffs creates losers on all sides. Jobs are at stake. Diplomatic ties are fraying. And the global economic machine, which relies on collaboration and integration, is starting to sputter. Some nations are now actively distancing themselves from the US, pursuing independent trade paths that could reshape alliances for decades. Energy is another front where the US could lose out. Take LNG, liquefied natural gas, as an example. The US was once on its way to becoming a top energy supplier to China. But now, Australia has swooped in to fill the gap, signing long-term energy contracts with Beijing while US exports remain stalled. That's not just a missed economic opportunity, it's a strategic loss. So where do we go from here? Is there a way out of this tariff spiral? Could diplomacy still salvage the situation? Or are we destined for a drawn-out economic Cold War that reshapes the global order for a generation? Right now, there are no easy answers. China has made its move. The US will likely respond. But with each new tariff, each policy speech, each closed-door negotiation, the margin for error grows thinner. There's one thing that's clear though, this isn't just about economics. It's about power, leadership, and who gets to set the rules of the game in the 21st century. For decades, the US was the undisputed leader of global trade. But now, with the rise of China and the shift in global sentiment, that leadership is being challenged like never before. What happens next could determine not just the future of trade, but the balance of power in the modern world. And that's exactly why you need to stay tuned. In the next video, we'll break down how specific industries, from agriculture to tech to energy, are preparing for this new economic battlefield. What strategies are companies adopting? What alternatives are governments exploring? And most importantly, how will all of this affect you, the viewer, in your daily life? Don't forget to hit the like button if you found this breakdown helpful, and subscribe for more deep dives into the world's most pressing issues. Drop your thoughts in the comments. Do you think these tariffs are justified? Is this economic war avoidable, or are we in it for the long haul? Thanks for watching, and stay informed.